Hi everyone. For today's video, I'm going to be talking about the state-of-the-art emerging electric vehicle Chinese car manufacturer NIO. If and when at any point you find the content you hear beneficial, informative, you like what you see, go hit that subscribe button, click the like. I'd really appreciate it. I hate saying that, but I would really appreciate it. It does help out the channel. NIO has been the topic of many high growth and value investors for the past few months. Investors have been relentlessly trying to pinpoint the next big EV manufacturer. Seeing the previous success of Tesla proved to new EV manufacturers that there was room to break through into the highly monopolized market, and that consumer interest and demand for green and clean vehicles is on the rise. To put it into perspective, Tesla's share price is currently hovering around $1,000 USD. This is highlighting the fact that there is plenty of room to grow for new EV manufacturers, and certain investors and analysts think this next big company could be NIO. So continuing with the stock analysis series I've been doing, we're going to be diving into NIO's balance sheet, their current and future business operations, and at the end of the video, I'll give my own personal opinion of whether I think NIO stock is currently a sell, hold, or buy. Debuting on the New York Stock Exchange in September of 2018, the highly anticipated IPO opened at just under $10 and underwhelmed, essentially stagnating around there for a few months. The stock took a turn for the worse and drastically fell in price almost to bankruptcy, eventually landing at around $1.50 USD per share. Starting in about mid-March of 2020, coinciding with the health situation, there has been a massive valuation surge in the stock, almost rising 200% in just the past few months. NIO makes sleek, powerful, and economic vehicles, specifically the ES6 and ES8 SUVs aimed at mid-class Chinese consumers, and after EV government subsidies are relatively affordable. Their compact and mid-sized sedans, the ET5 and ET7, are poised to begin production in 2020, which I think will greatly widen their market. They have seen huge growth of 38.8% year over year in total vehicle sales, and sales in April year over year have almost tripled. Alright, so jumping into NIO's balance sheet, we see that they're a mid-cap company at $7.836 billion in outstanding shares. They have quite a high 52-week spread, their low being just 1.19 and their high being 7.63, which was actually just hit today as of recording on Friday. They aren't reporting a PE ratio due to net income loss and aren't currently projecting a forward PE ratio either. Their revenue reported at the end of 2019 greatly increased year over year by almost $3 billion, which is a good sign. However, this was the case for the cost of revenue as well, which was reported just north of $9 billion, representing a $3.8 billion year over year increase. This cost of revenue was expected to be high since they are a new electric vehicle company. However, it's really chewing into their profit margins, which were reported to be negative $1.2 billion. Their operating expenses year over year remained nearly the same, but their bottom line net income was $11.3 billion in the red. They have an earnings per share of minus 44.10 and a profit margin of minus 138.57%, a return on assets of minus 34.47%, and a gross profit of minus 1.2 billion. Their current ratio is 0.53, indicating more liabilities relative to assets, and they do not pay out a dividend. I'm going to be keeping a very close eye on these earnings reports, so click subscribe. I'll have new videos up as soon as these earnings reports are out to better inform you of your next moves. Personally, as a shareholder, I'm currently sweating going over this. Hoping the rest of the video is more positive, literally and figuratively. So with a balance sheet like this and a surging share price, you can kind of see the paradox. Something's not making sense. What's being priced in? What do these investors know that we don't know? So let's analyze their current and future business operations and see if we can't find out why this valuation is occurring and if there's any viability to it. The first reason I'll be talking about why this valuation is increasing is on a macro level, and that's consumer sentiment towards electric vehicles. Currently taking place is a mass shift in ideology regarding pollution and more specifically EV manufacturing. Once a niche market just a few years ago, you can really see the writing on the walls. Electric is the way of the future. These massive oil giants are kind of holding out, doing whatever they can to stall this process, but it is going to happen. Consumers are demanding electric. EV only currently makes up about 5% of total car sales in China, But interestingly, these car sales are expected to see, over the course of the next 5 years, over a 25% compounded annual growth. I also believe that governments, especially in high density, high polluted areas, are going to phase out these traditional, conventional, gas polluting oil cars of the past and really phase in this new era of vehicle. Authorities in China are currently giving consumers a 10% subsidy for any electric vehicle they buy, and I can really see this increasing in the next few years. With Tesla sales really gaining momentum in these highly populated areas, there's going to be room for competition. It is now a proven, viable option to be an electric vehicle startup company. The public is willing to pay a slight premium for an electric vehicle because their sentiment has changed. The second reason I want to talk about why this valuation surge is increasing is that recently there has been an injection of cash into NIO from outside investors and local authorities. These authorities have invested almost $1 billion for just over a 25% stake in NIO, and they have now created a subsidiary company working under NIO called NIO China. NIO has also raised almost $500 million from a secondary share offering. This has given them some additional liquid cash that they can kind of play with, kind of buying themselves some more time to make it through these very uncertain times. The third reason why the stock is rising in valuation is from two analysts' upgrade rating, one from JP Morgan and the other from Goldman Sachs. These analysts upgraded from underweight to neutral and from a hold to a buy. These are some of the first inklings that there might be consumer interest, there might be investor interest in this company that seems to be breaking away from other similar EV Chinese manufacturers. The fourth factor in this puzzle has to do with batteries. Batteries have been a major issue for NIO as they had to recall nearly 5,000 ES8s due to a series of battery fires. This literally almost sent their company into the dumps. NIO has implemented battery swap technology into its vehicles and has built the infrastructure around this changing of batteries. It has now proved that this technology is viable and, more importantly, sought after by the consumer, as it has just completed its 500,000th battery swap. This battery swap technology is where a NIO driver will essentially drive to one of these swap centers and a robot will take out the entire battery, swap it with a fully fueled or higher powered battery in under 5 minutes, and the NIO driver just takes off. Now this is great for somebody who doesn't have the money up front to buy one of these more expensive, more higher powered batteries, but instead is anticipating driving further, maybe for a trip, and because of this, they drive to one of these swap centers and essentially rent a higher powered battery. This greatly widens their market as you don't have to pay for these massive batteries up front, which are a major portion of the cost of these cars. Once you're done with whatever battery you have, you drive back to the swap center if you want, and essentially just return the battery. These swap centers are a massive technology. Tesla toyed with the idea back in the day, and NIO has really shown that it's a terrific idea. The fifth factor is the unexpected, relatively quick recovery of the vehicle market in China. Many anticipated a very stagnant or slow growth regarding these vehicle manufacturers. However, in China, the car sale market in just April alone saw a 12% spike in sales. This rapid recovery of the car market has proved to investors that this new normal and decentralized working environment hasn't greatly affected the car manufacturer market, and people are still going to buy cars, they're still going to want cars, whether or not they're using them for the same purposes they used them in the past. So in recap, I do not think that NIO has a easy road in front of them. I think it's going to be filled with turmoil. I think it's going to be filled with ups and downs. It's not going to be pretty to look at. It's going to be volatile, it's going to be ugly, but there is so much upside. There is so much upside. If you as an investor are able to pinpoint the next EV company, you are going to make a lot of money. Is that going to be an easy thing to do? No. There is a fierce market right now. There are so many EV companies trying to go for this top spot, trying to be the next Tesla, and to pinpoint the exact one is going to be very difficult. Within the coming days, weeks, I'm going to be listing my 5 favorite EV companies. I'm going to make a separate video going over each one, as they are nowhere near close to being profitable, as is with many companies just starting out, especially car manufacturers. Buying the stock is a major risk. It's major risk. It's all speculation at this point. They're not even close to profitability, so just know the risks. I typically suggest just playing it boring and going the index fund route. You're probably better off doing that. As I alluded to before, I am a shareholder of NIO. Therefore, I do think NIO is a buy, like I said, on the risky side and only a very small allocation to your portfolio. But I won't hesitate to back out. I'm going to be keeping a close eye on their earnings reports. And if they keep hemorrhaging cash, I'm just going to back out. This recent surge has been good enough for me. I'm willing just to take my money and run if it gets any worse. Focusing on NIO specifically, I do think that consumer sentiments, recent cash injections, the analyst upgrade ratings, the battery swap technology, and the market recovery all will play into this stock very well. However, do tread carefully, as there is already a ton of speculation priced into this current share price. Like I said before, make sure to do your own research. Don't just listen to me because I'm saying it. That would be just unwise. Do your own research. Do your own due diligence in comprehending whatever company you're getting involved with. And yeah, I hope you liked the video. So yeah, thanks for watching, guys. I appreciate it. And I hope to see you guys next time.